Ladies and gentlemen, welcome to Only Trade to Win. I do not have any stock recommendations for you, and I do not provide any buy or sell signal. However, what I do have is a methodology that took 25 years to put together. And the intention of the show is to share with you how a professional trader thinks that you will implement it and become on your own a more successful investor or trader. The great part about today's show is that we've done a lot of the research about the US markets in the last 2 months, and we have a lot of detailed videos along with this final review. The NASDAQ was up 53% for the year, and the S&P 500 was in the second place, up 18.5%, both reaching all-time highs. And what I'm going to do is I'm going to take both of these indexes and I'm going to put them against these foreign indexes you can see there right here on the right side. And I will not do any major edits because I want you to see the whole process. And it's only boring for people who do not know what they're doing because there is so much information and so many things that are happening all the time. If you're doing your research, you're like an investigator and you're always busy with finding clues. So I think it's really exciting. And here, major world indexes in the spreadsheet. And what we're going to look at is we're going to look at the maximum drawdown. Then the next column, we will look and see how many years it took for the index to recover. Now, I will also would like to see what was the best return that index provided. I want to see how many years as the rally lasted. And then when I look at what I got in return, and what kind of risk I took, and I'm going to place it right here. And again, on my channel, we followed the rally all the way from the beginning, from early November to the very end of the year. And based on all the information that I have, I am putting NASDAQ and S&P 500 against major world indexes if it makes sense to invest somewhere. Maybe my information is outdated and I need to go and look somewhere else. So stay with me. I think you will learn a lot and it will be practical information that you can put into your own investing and trading starting today. And if you have any questions, please do leave them in the comment box because this is the only way that I can help you. And also, this is the only way that I can improve my channel. Now, I consider myself an average person and I don't retain much information really easily. So what I do is I try to create a system for everything. So what we're going to do with the indexes is we're going to look at the best case scenario, what kind of return they provided in the past, so I know what kind of upside I can put into my estimations. Then we're going to look at the worst case scenario and see, based in the past, what was the situation on terms of percentages when an index came into its all-time high. How much did it pull back? How many years did it take to recover? And then when I have that information, I'm going to make my own decision. And you will do the same too. And here's a little formula that we're going to use to calculate the rate of return to use for comparisons in the future, a constant measure. The first index we're looking at is the Amsterdam Stock Exchange Euronext. This is a monthly picture from the very beginning, and the data that we have the earliest goes back to July of 1993. Here you can see it on the left side of my screen. Right now is where we are on the right side of my screen. So by looking at this picture, I can say that from early 90s to 2000, the index experienced a really exponential growth and was up 373% in just 8 years or so. Now, one of the things that I like to do when I look at something new and that I highly recommend is color coding everything. Here on the left side, there is a second box that gives you ray, horizontal ray. And what happens is that when you place it on top of something and you hit it once, it just draws a ray to the right all the way into infinity. And when I see an all-time high like this, see right here, here's my color. So when I go to smaller time frames, I'm going to change to daily. This all-time high was set a long time ago, but it always shows up on my pictures, and that way I'll know where I am relative to my previous all-time high. Year 2000, right here at the left at the beginning of the purple ray, previous all-time high. So Euronext, or Amsterdam Stock Exchange, made its all-time high back in October of 2000. Now 24 years later, or let's say 23 years later, above it, I'm going to grab this tool here. I'm on the left side, 4, 5, the fifth one. And if you go all the way down, it says date and price range. You do not see it because it went outside of the screen, but it is date and price range, and it looks like this tool right here. I'm in the upper side right here above the euro sign. I grab this tool and I go back all the way to October of 2000 and I start measuring until today. So here is my price today. And if I look at it, I see right here, there's a little box that pops up. And inside of that box, the 10.78% in parentheses, this is the total rate of return that I got from the beginning of my period. Or it is 8,553 days. If we look closely in here, this is the beginning of last year of 2023. And we can tell that we're still negative after 22. So I would take this information to my spreadsheet, and here I will have 23 years to recover. And then I will measure my maximum drawdown from top to the lowest point. On the left side, again in parentheses, it shows 69.65%. That is how much Euronext lost from its top from that it made in 2000, March of 2009. And I take this information in here. Now we're going to select the same tool, date and price range, and we'll go from that low. This cyan box represents the range. And up here in the white box on top, you see in parentheses 269%. The index has increased from the lows until where we are right now. 5,389 days divided by 365.76 years. For anyone who's been investing in the Netherlands for the past 14.67 years, and I hope your investment returned more. We have to get all the numbers collected for other major indexes, and then we will compare them to the Nasdaq and the S&P 500 to decide if I had an outdated information believing that the best opportunities are in America, especially investing in the technology innovating companies, and also some big blue chip, old names, established names that have been providing great investment returns and dividends to its investors for generations and generations. Now, one last stop we have here is to find out the rate of return that we're going to use to compare to the other. So we add this column right here before, and what we do is we basically straightforward as we decided before. We're going to take the total rate of return and how many years it took for the index to get here. So we take the 269% and we divide it by 14.67 years, and it gives me 18.34%. I put it in the last column right here, 18.34. I'm not sure why it's red, but this is the annual return that I'm going to use and compare these numbers across. The returns will be different, and the amount of years it took them to get there will be also different, but I just want to have, here it's better this way, I just want to have a number to compare each one of them to and kind of have a very objective, or at least part of the decision that I'm making. Now we're going to go and do the same thing for all our world indexes, but this time I'm just going to the pictures to show you what I'm looking at, and then I'm going to transfer them on the spreadsheet and we're going to look at it together, because I think that if I'm going to keep transferring it, it will take a lot of time and also it will be really difficult to focus and follow. So by looking at the German index, it's pretty steady going up. We had a few instances where we sold off here. We had a 70% loss and 60 one more time. And here's a biggie quickie one, COVID 40%. And the recent one was 27. To the left side right here, I grab my ray and I shoot it from this stop that was set back in March of 2000. And I look that German index spent in this area 13 years. There was 13 years with no change. And if I take from this bottom and measure this rally, because this is one move, I can say that it spanned here 7,428 days, and 586 was the gain of the index in that period of time. But looking at this picture, it looks a lot better than the Amsterdam Stock Exchange. And if I had to make the choice between the two, the German index, because it is much more stable and it has not had that 23-year lag that Amsterdam Exchange had. Our next stop is Hang Seng. Major stocks in China and Hong Kong are listed on this stock exchange. Boy, this thing is in big trouble. Look over here. I'm grabbing my ray and I'm going to shoot it. I'll shoot it from back here in 1997. So right here, the index made its high in 1997, and right now it is trading below the 1997 level. So we're looking 24 plus 27 years. I will not even enter the numbers because there is nothing to enter. If I'm a reasonable person and my goal is to make money in the market, I would definitely invest in the S&P 500, 53% and 18%, where the Hang Seng is in the same place it was back 30 years ago, and it is down 52% from its all-time high that it set back in 2017. China, Hong Kong, off the list, off the question, not even looking further. Our next stop is the Korean Stock Exchange, the South Korean Stock Exchange. We also have history all the way from 1980s, 2,700% run up for 15,000 days, and it made its all-time high back in July of 2021. I will leave this up here because it's a huge number. And this last year, it is down about 24% from its all-time high. So the Korean Stock Exchange has performed phenomenally well. The only issue is they have a nutcase neighbor who is threatening them with nuclear weapons. When you have a basket case neighbor like that, the value of your property affected by that. When things get peaceful, I think South Korea is a good place to be. It has a good track record, better than the Hang Seng. Now our next stop is the Nikkei 225. These are the largest Japanese companies, and I am working on a long presentation for my Japanese clients. And here you can see that it's been 33 years and 11 months, and Nikkei has not made to its previous high that it set back January of 1990. It's at its all-time high, and it's still working towards that level. And I've seen some headlines that are saying that it did make its all-time high, but unfortunately it did not. And here you can see the top of this range right here, this pink box, is where it's all-time high. The Nikkei set its all-time high 33 years ago, and since it says 11 months, so we can say 34 years. And it has another 7% before it reaches its all-time high. Our next stop is the Shanghai Composite Index. I'm going on the left side here. I'm grabbing a tool. I'm going to go here. I want to draw a line through as many as I possibly can. I just grabbed the ray tool, and I'm going to go to this level right here and show you that composite index is in the same place it was in March of 2007. And that, my friends, is 17 years of no returns. China is in huge trouble. Now let's go back to the top and measure this spectacular drop, 72%. I don't know what you guys think, but with 72% drop and nowhere near in sight, let's grab our tool and measure exactly. We have 52% to go to all-time highs on Shanghai Composite, and it was 17 years ago. With all the geopolitical issues that are going on in Asia and the way these pictures look, we can say that the strongest one of them all is the Korean Stock Exchange, and the weakest one is the Hang Seng for sure. Okay, last one we have is FTSE 100, the index of the UK stocks. Pretty steady rise. As expected, two huge sell-offs. This is .com, and here is the financial crisis. So 52%, 49%, and pandemic, it sold off 36%. Now we're going to measure it from the inception, from the beginning. We have 12,000 days, almost 13,000, and up 330%. So what I'm going to do is I'm going to grab all the numbers and I'm going to enter them into our new spreadsheet, and I'll be right back. So for Germany, the largest sell-off we had was back in 2000 of 73%, and it lasted 7,336 days. So if we divide that by 365, we get 20.1, and we put it here on the spreadsheet, 20.1. Our last expansion lasted 7,398 days and returned 588%, or a total of 20.27 years. So in the case to get, we take the 588, 29%, and it goes into this loss. Now for the Hang Seng, we see the biggest sell-off was 66%, and we have spent so far 9,000 days in the same price range. Now to be fair, I'll go all the way back to the 90s. If we measure the return, it is actually up 400% from the 90s, and I'll enter these numbers. And since that high was set back in 12,145 days ago, I will do this. That's 33 years ago. And if we take the 462, all those decades, we get 13.9%. And it goes into this last box, 13.9. Next up, the Korean Stock Exchange. One interesting thing that I noticed about it is it trades in the range and then moves up 7,000 days in this little range after it's made that high. Then it spent another 5,000 days. Now my next stop is Nikkei 225. If you look down here, right in the middle, in parentheses, we have 81.45%. That's the amount that Nikkei 225 lost from its all-time high, and it did it in 19 years. Now, of course, it is having the longest bounce in history, up 396% in the past 14 years. And still it has 7% to go to its all-time high. I know looking at this stuff and doing it is not easy, especially the first. And the more you look at it, the more experienced you become and the better you will understand what you're looking at. But for now, just try following and doing your best. We just have a few more left. And if something doesn't make sense, please in the comments below, because this is the only way that I can help you. Our second to last stop is the FTSE. For the UK, we can see that the biggest drawdown they experienced was back in 2000, and actually they did not have any major sell-offs like have experienced. And here is that number. I had 122, which was incorrect. So correct number for maximum drawdown on the FTSE is 52%. So we rounded up to 10. Now, these numbers that we have here, there's some arbitrary numbers, but they're consistent. Going to sort it from the best, and then I'm going to go and eliminate the ones and are really far off from its all-time highs. And then we take the Hang Seng, and then we take the Shanghai, and we look at this area and see in 34 years it has not made it. Yes, it's approaching it. So out of them 3 losers, it's the best loser, is the second loser, and the Shanghai is the last one. And here's the thing. If somebody in the future says, for example, oh, look at the Chinese Shanghai Composite, this thing is up 10% average per year in the past 15 years, whatever amount of years. Now you can tell that this number actually means nothing, because we made it up by taking numbers from a picture and putting them. And if you look at the real picture, even though it looks like it's an uptrend, 110% off from its all-time high. And if we look at the Nasdaq and the S&P 500, they made their all-time highs last year, and before that they made their all-time highs 2 years ago in November of 2021. Now, I think that if we take KOSPI, the Korean Stock Exchange, I would be really concerned right now because of the actions of its neighbor, the North Korea, and the threats that are coming towards North to the South Korea. Invest into KOSPI right now, just because I think that the risk, the returns, and by the way, we cannot even estimate the risks. So for me personally, KOSPI is out of the question right now. If we look at the largest economy in Europe, Germany, its DAX, its index is number 2 in our spreadsheet. And I think that if you really want to go somewhere, I would look into Germany, even though I don't know much about German stocks and their culture. But looking at the numbers and looking at their picture, this may be an appropriate alternative for someone. And now you have your own method of selecting an index, an equity, or whatever has a price, and coming up with this structure so you can make your decision. And this is what it looks like for me. And here's my color-coded version: orange, not now; green, yes, and all the rest of them are no, 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 no. And again, just to summarize, so if I really wanted to diversify internationally, I would add the German index to my watch list, and I would start following and watching it the way we watch our 4 indices, because I really think that the biggest opportunities are in technologies and in general in the Nasdaq 100 index. And I'm just going to put them on the same picture so we can compare. And if we take a look at the really big picture, we can see here on the right side, we can see the total return for the DAX was 12,000%. For the S&P 500 is 22,000. And for Nasdaq 100 is 14,476. I'm going all the way back as I can find the data. But what I'm saying is that the opportunity not only was, it is in the technology. And if I wanted to diversify, I would be diversifying within the technology index and finding the strongest companies. Strong companies like Apple that is up almost 1,000% in the last 10 years. Or Amazon.com that is up 850%, or even our last year's champion, NVIDIA, up over 8,000% in the last 10 years. So for me personally, why would you invest into something like this when you have an option to get something like that? And my guess would be because nobody else has shown you this stuff before. Thank you for spending your time with Only Trade to Win. I hope you found this little exercise helpful. I know it will help you stock selection and decision-making process. Navigate with care, and I'll see you next time.